It feels like the Temecula Valley real estate market is reaching a breaking point. Affordability has been pushed to the max and interest rates keep rising. We are experiencing some challenges in our business that we have not felt in quite some time. I'll fill you in on the details. Hi, I'm Jessica Genung, and I am a realtor here in the Temecula Murrieta Valley. I put out this video market report once a month telling you the latest stats on the housing market, and I also often discuss what I call the trench report, which is what it feels like to navigate this current market environment from the boots on the ground and what challenges that me and my current clients are facing, and also the successes that we're having. At the end of my commentary, I go over the market stats with data that we pull from the MLS. We'll start with the trench report and why I feel we may be reaching a breaking point in our local housing market. The first issue I'm having, and this is the first time in years that I'm facing this challenge with a big percentage of my clients, is that I'm having a pretty major problem getting clients qualified that under normal circumstances would be highly qualified. I'm talking about two-income professional couples with good jobs that they've been at for quite a while, high credit scores, and oftentimes they're not even first-time home buyers. First-time home buyers typically don't have a huge amount saved because they don't have years of home equity appreciation that they can cash out on and use towards their next purchase. So they are often facing unique challenges when trying to buy their first home, and it can take some creativity or sometimes even some help from family to get them into their first home. Or oftentimes my clients can get pre-approved for the loan, but just because the bank will loan them the funds doesn't mean that they will be comfortable making the monthly payment. A lender can make you house poor if you are not careful. For an average home right now in the Temecula Valley, if you are putting a typical down payment of about 10 to 20% down, you are looking at around a $5,000 monthly mortgage payment, which for a lot of folks is hard to stomach. That is why I think the market is at a breaking point. Interest rates have continued to rise and have doubled since last year, and prices rebounded when we hit the spring selling season and are right back at all-time highs again. Nevertheless, folks continue to buy and sell homes, and that is something that doesn't change. So who are these people that are buying and selling? I'll talk about my business briefly. Let's start with the buyers. Most of my recent buyer clients have, for the most part, been paying either all cash, usually from the sale of another property, or one client, as an example, did a great job saving for retirement and is going to be pulling from those funds. But aside from all cash, the rest of my recent buyer clients have a big down payment, like to the tunes of hundreds of thousands, to get the target monthly mortgage payment down in the $2,000 and $3,000 range. These down payments are also likely to come from the sale of another property, or another one of my clients recently inherited some money, which they are now it's going to now enable them to buy their first home, which they would not otherwise have been comfortable affording. Despite the interest rates and affordability challenges, most new construction communities I work with are back to using wait lists. This is because we've been back to multiple offers on resale homes. About 4 to 5 offers on resale homes is what I'm seeing lately. My most recent listing in Menifee that closed last week, you may have seen my listing video, had about 4 offers, and a home that my different client purchased last week in Red Hawk had about 4 to 5 offers. It's still a great time to be a seller, but for buyers, there are so few resale homes that are on the market, and it's pretty slim pickings for the most part. New construction has been more popular than typical these past few months because it's taking up a bigger slice of available inventory in the current market, and some of the larger builders are offering some rate buy-down credits or offering a special lower rate. One of the local builders, for example, is offering a 5.5% rate on FHA and VA loans, and they are also offering credits towards buyers' closing costs. Reach out to me if you want info on the communities that are offering the 5.5% rate. Home buying demand is being suppressed right now by the government, and the longer the market gets held down, the bigger the pop is going to be when the rates come down, is my opinion. Let's get into the stats, starting with median sales price. As always, we are analyzing single-family homes only for simplicity, and we are looking at the cities of Menifee, Murrieta, and Temecula for the month of July because that's the last month that we have data for. Menifee's median sales price is dropping, which is a little bit surprising. It had a good size pop in June, and it's been on an increasing trend over the spring. But this drop here has basically erased the equity gains since April. So month over month, it came down $40,000 for a decrease of 6.8%. Moving on to Murrieta's median sales price, it is up 1% or $7,000 month over month, and it has been increasing steadily since February. Temecula has been steadily increasing since the beginning of the year, but in July the price dropped 3.4% or $25,000. This is a decent drop, but it's just something to watch at the moment because, as I always say, 1 month does not make a trend. Moving on to closed sales. Closed sales are kind of interesting here. In my previous slides, only the Murrieta sales price had increased, with Menifee and Temecula decreasing. The same goes for the number of closed sales. Menifee and Temecula sales are down here month over month in a pretty major way percentage-wise, while Murrieta is up month over month and year over year, which is also not the case for Menifee and Temecula. Menifee closed sales was down 19.6% from 143 sales to 115. If we look at Murrieta, as I said, it increased just a little bit, 1.6%. It's only 2 houses, but it's our only increase from 123 to 125 closed homes. Lastly, we're going to look at Temecula. Big drop percentage-wise in Temecula, the largest of the 3 cities, 28.3%. So from 138 homes to 99 homes in July. Median days on market. So that's how long is it taking a typical home to sell in each of these cities. So this is getting a little bit redundant in this market report, but the Menifee and Temecula markets are dragging a bit and taking longer to sell. Still very quick by historical measures, by the way. But Murrieta homes are selling quicker month over month. So Menifee median days on market went month over month, went from 13 days to 17 days, an increase of 4 days, which is kind of a lot just in 1 month actually. Murrieta's, as I said, is our only city that is decreasing, so just by 1 day. So from month over month, June, it was taking 11 days to sell a home. In July, it took 10 days to sell a home. And then if we look at Temecula, lastly, it is the reverse of Murrieta, where it's taking 10 days in June to sell a home and just 1 more day in July. Next, we have a number of listings. Lack of inventory has been the driving story in the housing market for quite some time, and it has gotten especially bad since about March in the Temecula Valley. I saw this article recently where they call it a seller strike. I thought that was a great way to put it. This article is discussing the nationwide housing shortage. The housing market's seller strike is so ruthless that only 7 out of the nation's 200 largest markets are back to pre-pandemic inventory levels. So this is not just an issue in our local market, this is a nationwide housing problem. Number of listings in Menifee increased 4.1%, but it's only by 9 homes for month over month, from 243 homes to 253 homes. Menifee is our only increase in inventory, and it's just a little bit. Number of listings in Murrieta, it has decreased 10.2%. So from 206 homes in June to 185 in July. Lastly, we're going to look at Temecula, has also decreased, although not nearly as much as Murrieta percentage-wise. So Temecula only came down 2.5% as far as inventory goes. So it's only 5 homes, from 201 homes to 196 homes. These decreases, by the way, are seasonally typical. These don't seem abnormal to me at all. Inventory ramps up in the spring. A lot of sellers are selling in the spring. That's the popular time to buy. That's when all the buyers are looking, especially the ones with kids that are trying to get in before the school year starts. Well, the school year has started now, and so it's typical for inventory to level off and decline as we get into the fall and as we head into winter. So as always, appreciate you watching this market report. If you have any questions about the market, feel free to reach out to us. We love to hear from you. Bye.